we are kicking things off with the Washington Nationals making a major roster shakeup. The Nationals have just claimed righty Zach Kent off waivers from the Minnesota Twins to fill a crucial 40-man roster spot. This move comes right as they prepare for a new series, and we dive into everything we know about this interesting waiver wire flyer and what it means for the team's bullpen depth.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we switch gears completely and dive into the high-stakes world of ARM Holdings plc. We break down why analysts are recommending an overweight position for this company, looking at its incredible margins, and how the valuation metrics, specifically EV to sales and price to royalty revenue, tell a completely different story than traditional earnings reports suggest. Then we get into the deep dive on valuing ARM Holdings. We explore the complex royalty business model, understanding why metrics like trailing royalty revenue and forward EV to revenue are the true indicators of growth, and how the expansion of ARMv9 and compute subsystems is fundamentally changing the per-chip economics. And finally, we look at international headlines as President Donald Trump revives controversial talk about arming Iranian people. We examine the president's comments regarding weapons being sent and the shifting calculus on supporting the Iranian population amidst the ongoing conflict, and what this means for the geopolitical landscape. Stay with us all night for the full story. The Washington Nationals have made several roster adjustments ahead of their upcoming series against the Minnesota Twins, signaling a shift in their bullpen strategy. Following the signing of right-handed pitcher Sean Dubin to a minor league deal and the departure of lefty Chanel Perez, the Nationals have further reshuffled their 40-man roster. The team successfully claimed right-handed pitcher Zach Kent off waivers from the Twins, filling the vacated roster spot. Kent, who has appeared in games for the Twins this season, could potentially earn a quick turnaround opportunity. Currently, reports suggest Kent will head down to AAA Rochester, as Orlando Ribalta has already been recalled to replace Perez on the active roster. Zach Kent presents an interesting prospect as a 28-year-old player who has yet to dominate at any level. Originally a 9th-round pick by the Texas Rangers in 2019 out of Virginia Military Institute, he broke into the majors with the Cleveland Guardians last season. In his professional career, Kent has pitched in 14 major league games, posting a 4.64 ERA and a 1.59 WHIP over 21.1 innings. His 18.13 BB ratio indicates that he still needs refinement in his control to become a viable major league reliever. With the Nationals cycling through various pitchers and dealing with injuries, Kent is viewed as valuable organizational depth that can be called upon when needed. As Chanel Perez has elected free agency, Kent may serve as a placeholder until a preferred arm surfaces on the waiver wire. The team is hopeful that Kent can acclimate at AAA Rochester rather than facing immediate pressure in Washington. ARM Holdings plc is facing a mixed outlook from a short-term investment perspective, according to recent analysis. While the company exhibits a technically solid foundation, some indicators suggest a deteriorated fundamental configuration. A key point of scrutiny is the company's EBITDA to sales ratio, which remains relatively high, translating into strong margins before depreciation, amortization, and taxes. These margins are noted as being among the highest on the stock exchange, indicating that the core business activity is generating substantial profits. This sound financial standing provides the firm with considerable flexibility for investment. Consequently, the prevailing analyst sentiment leans towards stock overweighting or purchase recommendations. Over the last 4 months, analysts have significantly revised their average price targets upward, and the overall opinion of analysts covering the stock has improved, with consensus analysts strongly revising their outlook over the past year. The company has a history of releasing upbeat results that often generate significant surprise rates. However, Valuation metrics present challenges. With expected price to earnings, PE ratios of 220.73 for the current fiscal year and 164.18 for the next, the company operates with high earnings multiples. Furthermore, the company's enterprise value to sales ratio ranks among the highest globally, suggesting the firm appears highly valued relative to the size of its balance sheet and the cash flows generated by its operations. Despite positive analyst revisions, the 3-month average target prices set by analysts are not currently offering high potential when compared to existing stock prices. Moreover, significant divergence in individual analyst price targets indicates difficulties in accurately evaluating the company and its underlying business. ARM Holdings is reshaping investor perception by positioning itself as a royalty business trading like a growth stock, moving beyond traditional earnings metrics. The core of ARM's business is not chip manufacturing. Instead, it collects royalties on every chip utilizing its technology, a toll that scales with volume, architecture generation, and design complexity. This structural difference means ARM's income statement lags the actual royalty pipeline by 2 to 3 years, making licensing revenue a crucial leading indicator of future earnings. Traditional semiconductor valuation relies heavily on earnings because revenue tracks unit volumes directly. ARM, however, operates on a different model, boasting 97.5% gross margins. Therefore, analysts are urged to use enterprise value to revenue and price to royalty revenue as primary valuation lenses, as earnings multiples can be misleading. The central investment thesis for ARM revolves around royalty rate expansion. This is driven by the adoption of newer architectures, such as ARMv9, which carries higher per-chip royalty rates than previous generations. Furthermore, the sale of compute subsystems, CSS, pre-integrated IP blueprints, is accelerating, with CEO René Haas noting CSS represents nearly 20% of royalties and shortening time to market. The shift in demand is also being fueled by the AI boom. As AI workloads become more agentic, they are CPU-bound, necessitating higher performance chips that command increased royalty rates. Data center royalties, specifically, have seen significant year-over-year growth as hyperscalers scale their ARM-based custom CPUs. Haas estimates that agentic AI could increase the required CPU cores per gigawatt of data center capacity significantly, translating directly into higher ARM royalties. Key signals confirming this expansion include surging licensing revenue, with a recent year-over-year increase driven by growth in AI and data center markets. The growth in the ARM Total Access Program and CSS license count are also being tracked as indicators of increasing partner commitment to future architecture upgrades. While the stock currently trades at a 38x next 12 months forward, revenue multiple and approximately 100x trailing royalty revenue multiple, suggesting a premium over traditional chip makers. This valuation is predicated on the royalty rate expansion thesis playing out. Consensus estimates project substantial revenue growth through 2028, with projections indicating a potential target price, suggesting significant total returns if the growth drivers, V9 adoption, CSS uptake, and data center royalty growth, are realized. The primary risks involve multiple compressions if the AI infrastructure investment cycle slows, or if open-source architectures capture significant data center market share. Ultimately, the success of ARM hinges on demonstrating that royalty revenue growth outpaces unit volume growth, proving that per-chip economics are materially improving. Former President Donald Trump has revived discussions regarding the United States supplying arms to the Iranian people to combat the regime, suggesting that weapons were already in transit. The topic resurfaced during an interview on The Hugh Hewitt Show, prompted by questions about encouraging public protests and referencing the deadly January crackdown that resulted in the loss of approximately 42,000 unarmed protesters in 2 weeks. Trump argued that an unarmed populace could not effectively confront armed forces, stating, "If you have 5 people with a gun and 250,000 without, The 5 people with a gun, assuming it's used fast enough, which they do, they're going to win. They have to, they don't have weapons. He acknowledged the loss of life and stated, "They lost 42,000 to be exact. 42,000 people in about a 2-week period. Protesters, innocent, unarmed protesters." Shifting his perspective, Trump suggested the U.S. possessed the capability to dismantle the Iranian military in the initial hours of resumed hostilities, despite Tehran attempting to reconstitute its forces under a ceasefire. When pressed on who would benefit from Iran's oil, Trump returned to the issue of arming Iranians, asserting that if they possessed weapons, they would fight back. He noted that previous claims of weapons being taken by Kurdish militants were countered by his assertion that armed citizens would be effective. If they had guns, they would fight back. I'm convinced of that. But you can't have an unarmed population against people with AK-47s and stand there, even if you have 250,000 people. Trump indicated a change in his assessment regarding the Iranian military's capacity, claiming that the regime's weapons supply has been depleted and that financial and economic pressure has severely impacted the forces. He suggested that soldiers and the Revolutionary Guard Corps are no longer being adequately compensated, stating, "They have very good weapons on the other side. Now they've been depleted. A lot of the people fighting don't want to fight anymore. They're not getting paid anymore from what I'm hearing, because we have obliterated them like, in the military, we've done the same thing to them financially, economically." Despite these remarks, tensions remained high, with Monday marking the first major violations of the week-long ceasefire, including a missile barrage from Iran against the United Arab Emirates and exchanges of fire between U.S. and Iranian forces in the Strait of Hormuz. Trump declined to comment on the status of the ceasefire.